In 2015, two friends made a decision. One of them, Daniel, opened a brokerage account and started buying stocks. He believed in businesses with real products, real revenues, and long-term growth. He bought shares of Apple, Amazon, and Microsoft. The other, Leo, didn't care about steady growth. He saw something never seen before: crypto. He bought Bitcoin at $300 and Ethereum at $2. He believed the old system was broken, and this was the future. Two different paths, one built on the old rules, one betting the rules were about to change. But deep down, they still asked the same question: which one was the better bet? Stocks and crypto aren't just different assets, they represent different mindsets. Stocks are slow, stable, and backed by companies. Their value comes from earnings, products, and people. They're built to reward patience, not speed. Crypto, on the other hand, is wild. It doesn't rely on balance sheets. It runs on belief, adoption, and code. One path says, build wealth over time. The other says, be early or be left behind. This is why investors often don't just choose one or the other. They choose a side. They choose a philosophy. But when it comes to returns, one side has already made history. Over the last 100 years, the S&P 500 has returned around 10% annually, on average. That's enough to turn $10,000 into over $1.2 million if you stayed invested. Stocks like Apple, Tesla, and Amazon have made ordinary people millionaires. But those gains happened slowly, often over a decade or more. Then came crypto. In 2013, Bitcoin surged over 5,400% in a single year. In 2017, it climbed 1,300%. But here's the twist. Those same assets have also crashed by 70 to 80% multiple times. Crypto offers insane upside, but equally devastating downside. The stock market is more like a marathon. Crypto, it's a rocket with no seatbelt. Every investment chart hides something deeper: emotion. When the market drops, do you panic? When your coin triples in value overnight, do you sell or wait for more? Daniel, the stock investor, learned to embrace patience. He sat through dips and bear markets, trusting that time was his greatest ally. Leo, the crypto believer, learned the opposite. Timing was everything. Miss the boom, you miss the return. Wait too long, you ride the crash. That's why crypto isn't just financially risky, it's psychologically demanding. It preys on fear of missing out, greed, and fear. It rewards boldness and punishes hesitation. And yet, for some investors, that volatility is part of the thrill. So what does the future look like? Stocks still offer strong fundamentals. Companies are innovating, especially in fields like AI, biotech, and clean energy. These aren't just tickers, they're teams building things that shape the world. Crypto, meanwhile, is trying to build an entirely new world, one where finance is decentralized, trustless, and global. Bitcoin is being called digital gold, and Ethereum is becoming the infrastructure of Web3. But the future of crypto isn't guaranteed. Regulation is coming, competition is growing, many projects will fail. And while some believe crypto is still in its early days, others think the Wild West days are already over. The truth? Both stocks and crypto will play a role in shaping the future, just in different ways. This debate, crypto or stocks, isn't really about the assets. It's about you. What kind of investor are you? Can you handle volatility? Are you willing to bet on new systems? Or do you prefer stability, consistency, and decades of data? Leo and Daniel took different roads. Neither was wrong, neither was perfect. They were just walking paths that fit who they were. The smartest investors aren't the ones who guess the next big winner. They're the ones who understand their own temperament and invest accordingly. The truth is, the best investment isn't the one with the highest return. It's the one you can actually stick with, through the highs and lows. Because wealth isn't just about timing the market, it's about knowing yourself. And the sooner you figure that out, the better investor you'll become.